Well, here we go again. Tesla will be getting third-party supply of 4680 from both LG Chem and Panasonic in Japan. I guess this is the Japanese factory this year, which will complement the Austin production and ensure that the Cybertruck ramps efficiently. This is from James Catt this morning. You can find him at Tesla Fan MTL on X. Tesla stock is up strongly this morning early. Why? I think it might be there's almost no news related to Tesla today, nothing negative at all that I could find. And then there's also this. Cathie Wood did buy more. Cathie Wood has been buying and buying and buying more and more shares of Tesla like crazy. I have made the claim a few times that she's holding the stock up single-handedly. Anyway, we also have this from Tesla Chan that going on a little bit further on this business about the batteries, that LG Energy Solution President Kim Dong-young, I'm sure I pronounced that right, said it will mass produce 4680 cylindrical batteries as early as August. It will start mass production of the 4680 batteries at their Ochang plant in South Korea. So interesting that we have two facilities now that will be making the 4680 in addition to Austin. All right, so this is Randy Kirk. Please hit like, subscribe, and notify. We've got a lot of economic news for you today, and it's so much that I can't hardly even have had a chance to really think it through, but maybe as I'm restating it again. Anyway, but of course, tonight we will have Bradford Ferguson, and he can help us maybe sort it out and also take a look at how the stock market reacted to massive amounts of reporting today. And then Brian Wang, I think, is going to be with us at the noon hour today. If not, it will be me. Just me, giving you some kind of a analysis. I'm not sure what that's going to be, but look for it around 11. I'm sure it'll be great, right? Anyway, also, did I say like and subscribe and notify? And then also there's this business about joining Patreon. Could use a few more folks to join Patreon right now. A little bit lacking in the number of folks jumping onto Patreon in the month of, well, actually, the first half was okay. Second, we're not even to the second half. I am confused this morning, but let's take a look at this news and see what's going on. So U.S. Treasury yields fell Thursday after weaker than expected retail sales data. Coming on the heels of a hotter inflation print this week, this raised some concerns about the strength of the consumer, which, of course, the consumer has been the entire reason why we've had a much better year in 2023 than anybody expected. So the yield on the Treasury early on was down 6 basis points. We'll look at that in a few minutes, of course, and see where it is now. The 2-year Treasury yield was last down by more than 5 basis points this morning at 4.519. And then investors assessed the January retail sales data, which dropped more than expected. Retail sales tumbled 0.8% last month, more than the 0.3% decline expected by economists. I mean, that is a gigantic drop. Retail sales minus autos dropped 0.6%. So auto dropped even more than overall retail sales. Not good for auto, not good for retail. Those are big numbers, but that is a 1-month data point. Again, we don't want to take too much into consideration from 1 month, but if you had this 2 months or 3 months in a row, that would be certainly indicative that we could be heading towards some kind of a soft or not so soft landing. This comes after the latest. Meanwhile, Chicago Fed President Austin Goolsbee on Wednesday suggested that market participants should not be too concerned about the CPI reading. Austin Goolsbee and I agree more than not when it comes to this kind of stuff. But anyway, he says it is totally clear that inflation is easing. He also said he would not support waiting until the 2% target rate for inflation had been met to begin cutting rates. Well, he is one of the doves, and that's interesting to hear. Elsewhere, data showed that the United Kingdom economy contracted by 0.3% in the fourth quarter of 2023, pushing the country into a technical recession. Now, we have this differentiation in the United Kingdom also of technical recession as opposed to just recession. Japan also has been all of a sudden, and surprisingly, nobody expected it, they are now in a technical recession. So we've got China in recession, we've got Japan, we've got the United Kingdom. These are 3 of the top 10 economies in the world that are now in recession. In fact, Japan's recession actually pushed it down to where it is now a smaller economy than Germany. Germany now has the 3rd largest economy in the world, not Japan. Interesting piece of news. Anyway, we've got this from the real E.J. Antoni. He says the New York Fed manufacturing surveys slowed, but its decline was not as bad as the previous month. So it really dropped last month. I forget what the number was. It was just huge. Anyway, it's showing that the price increases accelerated. However, and this shows another stagflation report, according to this real E.J. Antoni. Employment was flat. The work week shortened. New orders were still negative. So the overall report was not as bad as expected, but everything about it was bad. It's like the prices up, new orders negative, work week shortened. Anyway, not looking good out of that report. From MarketWatch, the number of Americans who applied for unemployment benefits in the early February fell to a 1-month low of 212,000, indicating layoffs remain low despite sharp job cuts at some big businesses such as UPS. Well, we've been reporting on a number of them in just the last couple of days. Paramount, I forget some of the others. Anyway, and I also mentioned last night in the report that we've seen 30,000 layoff. In other words, there's a report. It's called Warns. That warns about big layoffs, and the big layoffs are at 30,000 again in January. That is really huge. And this 212, by the way, for the month of for the last week, is not outside the range. It's been in this exact range. 187, I think, was the low. 230, maybe the high. So it's right in the middle of the range. Initial jobless claims slid by 8,000 from 222,000 in the prior week. After the usual ups and downs during the holiday season, new jobless claims appear to have settled in the 210 to 220 range, even a smaller range that I'm talking about, but I was looking at a longer period. Businesses are not hiring as much as they were last year, but they're not cutting as many jobs either, according to MarketWatch. Economists polled by the Wall Street Journal had forecast new claims at 220. So this was pretty close. But here we go. This is the one I always look at, the 4-week average of claims, which quiets some of the week-to-week noise, rose by 5,750 to 218,000, up from 212 the previous week. The big picture, according to this article, the U.S. is still adding jobs and unemployment is extremely low at 3.7%. And that is that. From Morningstar, so we had 2 of the Feds reporting this morning, the New York Fed and the Philadelphia Fed. The Philadelphia Fed showed manufacturing index accelerated to a reading of 5.2% in February from a negative 10.6 in the prior month. That's quite the turnaround. Economists expected a reading of negative 9. So huge miss on what the expectations were. This was the first positive reading in the index since August, and any reading above 0 indicates improving conditions. So there you go. We've got one manufacturing survey showing something good. Don't worry, we've got more negatives. I'm sorry, I'm not trying to be negative here, but most of the information was not that great. So listen to this one. This is from MarketWatch. The cost of imported goods jumped 0.8% in January, marking the first increase since last fall and the biggest rise in almost 2 years. The higher cost of imported goods was fueled in part by rising gas prices. Now, they don't say if this is gasoline. I don't think so. I think this is natural gas prices, but most other categories also showed increases. Import price minus fuel rose 0.7% last month, the government said. Until the January report, the cost of imported goods had fallen steadily and contributed to lower U.S. inflation. And the economists polled had expected a 0.1% drop. Now, look, this report is weird on so many levels. This makes the CPI report seem normal or smart or I don't know. gas prices. It can't be gasoline prices. Those have been dropping, and I don't think we import any gasoline from anywhere. So it's got to be, we import natural gas? What gas prices are they talking about? And natural gas prices have dropped through the floor. So that can't be it. I have to look into this. This is one that I promise I will look deeper into this report and find out what the heck is going on. It makes no sense at all. We have this from Seeking Alpha. We also had the U.S. industrial production report this morning. It ticked down 0.1% month over month, missing the positive 2.2% consensus and compared with 0 last month, which was revised from a positive. So this is a negative. We have revised last month's down, and now we have this one being down more than expected. Capacity utilization was only 78.5 versus the 78.8 expected and 78.7 prior. This was also revised up actually from 78.6. So you like to see capacity utilization above 80. We're consistently below 80. And in general, of course, that is a recessionary look. Well, what in the world does all of this mean? I would say what it means, the overall picture, as best as I can get it, maybe tell me in the comments below what you read from all of that reporting, is that the economy is not doing as well as folks thought. The retail sales, capacity utilization, the manufacturing surveys, except the Philadelphia, which was okay, but in general, it would show slowness in January. And, that's not what the market has been showing. So the market has been saying, looks like the first half of the year is going to be fine. Larry Goldberg is saying, no, it's not. and the labor statistics have not been anything as good as what the headlines have been saying. If you look deeper into those labor numbers, it was all part-time labor, and full-time labor was actually down. And in fact, all of the labor increase was in part-time, and the decrease in full-time offset all of that increase in part-time. So I am not sure where we're going. I continue to say I think there's a 50-50 chance we see a recession in the third quarter. And Larry, of course, has his number, which is much sooner than that, with a 100% chance that we go into recession. Well, what are the markets saying about all of this? Let's check it out. Early on, of course, Tesla was up nicely. Let's see if that has continued to be true. We have Tesla still up $3.55. That is a very strong opening this morning compared to all the rest of the markets. The Dow is up 175, NASDAQ down 5, and S&P up 10. We've got all the Magnificent Seven is all down except for Meta and Tesla. Meta is up $3.35, less than a full percent. All the rest are down. And then the Cathie Woods are all up this morning reasonably. Some of them okay, some not bad. ARK's up and etc. PayPal up, Square's up. Anyway, okay, so let's go ahead and take a look at these percentages. So we have the Dow up 0.4, NASDAQ down 0.08, S&P up 0.2, and Tesla up 1.8. And as mentioned, that's way better than any of the Magnificent Seven, way better than the indices, just as you could tell. Let's go ahead and take a look at what's happening with those bonds. And we've got the bonds down still 5 basis points on the 10-year. Actually 5.3, back down to 4.214. That's still above my 4.2. I hard to say. I don't know if it'll get below the 4.2 again today, but it's certainly trending that way. We've got the rest of the long-term bonds, but again, look at the 2-year. The 2-year is down only 3.4 basis points, which means that you've broadened that inversion again. If you don't understand what inversion is, take a look at last night's. Jeff Lutz and I went into the details of what an inversion means, what it is, the definition, and also why it's important. We've got the 2-month actually in positive territories by just by 0.2%, but it's still in positive territory. compared to the 10-year going down 5.5, which is making the 2-month inversion wider, which is just surprising, but it's indicative that we are headed towards a recession. Whether that's true or not, I'm still at that 50-50. I have not made a decision to go to more than a 50% chance of a recession in the third quarter. That's still my stance. Okay, let's now go in and take a look at where oil is happening this morning. We've got oil up a half a buck at 77.12. As we mentioned last night, when Jeff Lutz and I were talking about this is a very tiny range that oil has been for a while. Very interesting that it's such a tight range. Brent is in that same tight range. We've got natural gas up a little bit this morning, almost 1%, at $1.65, 62 rather. It is at all-time lows. I mean, for 30 years, continues to be at this extremely low level, which is why I said that other note is so weird. And I don't think we import natural gas. Maybe we import gasoline, but I don't think so. Anyway, I got to look into that. We have got the dollar steady. It was showing down. So it's steady to down. We'll call gold up just a tad this morning. This is surprising. Maybe the retail sales are rushed to safety a little bit here this morning, sitting at 2014 in the lower end of the range that it's been recently. Copper up a little bit this morning. According to Larry's theory, copper, not just Larry's theory, Larry is reporting on lots of people have the theory that copper is the canary in the coal mine. It is up a buck, 1.32% this morning. And that would be the opposite of indicating a recession. Why copper would be up this morning got me, maybe because it was so low. We have got crypto up, Bitcoin up again, 52,658, up 864. And of course, that is, some very, very high numbers for crypto, or for Bitcoin rather. We have got the pre-market. We went through all that already. So let's jump back to Tesla again. And Tesla is still sitting up over 2% right now. Again, not entirely sure, $4.14 up. Not entirely sure why Tesla is up so strongly this morning, other than Cathie. Maybe she's buying more and more. Listen, yesterday's interview with Scott Walter was absolutely fascinating. We talked about the ways that they're having to use pure physics in order to train these robots in ways I don't think that I had no idea. Maybe you had an idea, but it turns out that they have been using these pure physics methods to make animated characters appear more real in the way that they function, and the way they manage things, and the way they hold things, drop things, etc. Very, very interesting stuff. If you missed that yesterday, I will put a card right here for you to be able to go and check that out. If you didn't like it, hit like. If you haven't ever subscribed, we are now heading up towards almost, we're in the 20,100 now, just in a few days. Thank you very much for all the folks that are subscribing. Love to have you join Patreon. Love to have you buy some Cybertruck bottle openers, continuing to sell quite nicely on Amazon. Thank you very much, everybody, for all those openers that you bought, because it's really helped put the business in play, and now is continuing to help with my personal income, which is important because I have to have income in order to do this show. All right, so I think that's all I've got for you this morning. A very interesting day indeed in terms of all that reporting. And tomorrow, what do we have? We have the PPI. So there's never a dull moment. See you much couple times a day, and then in the morning again. It has been great talking to you.